The term capital market is a broad one that is used to describe the in-person and digital spaces in which various entities trade different types of financial instruments. These venues include the stock market, the bond market, and the currency and foreign exchange markets. Now, there are mainly two forms of capital markets, namely primary and secondary. When a company publicly sells new stocks or bonds for the first time, such as in an initial public offering or IPO, it is done in the primary market. Most of the participants taking part in the primary markets are institutional investors like pension funds, asset managers, etc. Small investors are often unable to buy on the primary markets due to the size of the transactions. Secondary markets are essentially exchanges where investors can buy and sell securities like stocks and bonds. Example of stock exchanges where these regulated activity takes place are New York Stock Exchange, Singapore Stock Exchange, and many more. Capital markets are used primarily to sell financial products such as equities and debt securities. Equities are stocks, which are ownership shares in a company. Debt securities, such as bonds, are interest-bearing IOUs. Another key financial product is derivatives, which allows client indirect exposure to the above-mentioned products. The most common way to accessing capital market is through a bank, which provides their clients access to the public capital markets. Banks have access to most of public capital markets in the world and thus provides investors with access to these markets. Investors can then use their investment accounts to invest in securities for markets they are provided access to. Investors can invest in stocks, bonds, or foreign exchange. Investors can also use derivatives to access exposure to stocks, bonds without directly investing in these securities. These are complex and risky investments which requires clients to be well versed with them, including the relevant product-specific risks before investing. Any investor should have a well-diversified portfolio. As the saying goes, the only free lunch is diversification. Diversification ensures clients have spread out the risks and also have a more varied exposure. And one of the efficient way of getting diversification is having a multi-asset exposure. Hence, client can consider using combination of stocks, bonds, and foreign exchange in their portfolios to express their investment views and, most importantly, asset classes that suit their risk appetite and suitability. Investors should also have exposure to various geographies via respective stock exchanges. So consider gaining exposure to US via New York Stock Exchange. Consider gaining exposure to Singapore via Singapore Stock Exchange. Clients can consider using derivatives in their portfolios for specific needs like hedging, protection, or expressing specific needs like range-bound markets. Capital markets are well regulated globally and thus allow investors a relatively reliable platform to express their investment objectives. Expanding investment horizons beyond physical borders can provide diversification and potential higher returns. With a tailored approach, investors can capitalize on opportunities and manage risk across different regions and asset classes. There are many ways that HSBC Singapore tailors its offering to each client. Firstly, dedicated relationship managers to provide personalized advice based on client-specific needs and provide regular portfolio updates and reviews. Secondly, risk management and hedging solutions to help clients mitigate market and currency risk associated with global investments. Thirdly, diverse investment products such as unit trust, equities, bonds, structured products, and more. Lastly, global wealth solutions including international investment, FX, international mortgage, and estate planning. HSBC has a comprehensive offering for capital markets. We have a very user-friendly online securities trading platform which provides access to various markets. HSBC also provides access to fixed income markets for its clients, which allows them to buy or sell bonds across various geographies through our platform. We also provide a very comprehensive structured product offering to meet our clients' esoteric financial needs. And it also provides a competitive FX offering for transactional needs. Most importantly, at HSBC, we provide clients with access to wealth experts who work with clients to understand their financial needs and then use the above comprehensive capital market solutions or platforms to enable clients to fulfill those needs. This makes our wealth offering compelling and comprehensive for our clients.